Anthony Grasso here, bringing you financial news that you could use. This particular video, I'm going to do a stock analysis on Baidu. Is this Chinese internet company worth investing in right now that delisting worries are almost most likely off the table? Well, let's find out together. I'm going to go over a summary of the company. I'm going to go over its product offerings, recent headline news, look at the financials of the company, look at what the analysts are saying, and then finally, I'm going to give them a buy, hold, or sell recommendation for your short-term and long-term growth investors out there. And as always, folks, don't forget to smash that like button down below. Definitely helps. And consider subscribing. Hit that notification bell if you like your daily stock reviews and recommendations from an unbiased source. So let's get right into it. As always, folks, this video is brought to you by Webull, which is an online brokerage trading platform where you can buy stocks, options, ETFs, and cryptocurrencies. Now, if you sign up today and deposit any amount, you can get up to 12 free stocks by using my referral link in the description down below. All right, so what exactly is this company? So this is, consider this company like the Google of China. It's a Chinese language search platform on its Baidu.com website that enables users to find information online, including web pages, news, images, documents, and multimedia files through links provided on its website. So basically just like Google. Now the company operates through two segments: the Baidu Core segment and the iQIYI segment. I'm just going to call it iQIYI. The Baidu Core mainly provides search-based, feed-based, and other online marketing services, as well as products and services from the company's new artificial intelligence initiatives. Now, within the Baidu Core, the company's products and services are categorized as the mobile ecosystem, Baidu Artificial Intelligence Cloud, and the intelligent driving and other growth initiatives. The iQIYI is an online entertainment service provider that offers original, professionally produced, and partner-generated content on its platform. All right, so they're basically a huge Google just of China. They're basically the Chinese Google. All right, so let's look at some of the news of the company right now. All right, so recently there's a lot of worry about Chinese companies traded on the New York Stock Exchange and our exchanges here in the U.S. for getting delisted. Well, the U.S. did a preliminary deal with the Chinese regulators for audits to reduce the delisting risk. Now, the deal is where U.S. authorities will have the sole discretion of the audit review. The preliminary deal is only the first step within a crucial moment in time that will come mid-September, with the PCOAB planning to have inspectors on the ground in mainland China and Hong Kong. Now, the proof is in the pudding, of course, but this is a first great step, and we don't have to worry about delisting at the moment in time. All right, another great news of the company. Well, Baidu is going to report its second quarter earnings tomorrow. And what to expect? Okay, well, this is what Wall Street thinks. Wall Street expects that the Beijing-based company is to earn $1.58 per share on revenue of $4.23 billion, or billion won. Now, this compares to the year-ago quarter when earnings came to $2.39 per share on revenue of $4.84 billion. Now, for the full year ending in January, earnings are expected to decline by 5.3% year over year to $7.67 a share, while full year revenue of $19.24 billion would rise about 2.2% year over year. But we have to wait to see for tomorrow morning. You know, they're going to have the earnings call in the morning, so hopefully they will beat or meet expectations. All right, so the Chinese also revealed recently its first quantum computer called iQIYI. The current estimates for quantum computing is to create about $450 to $850 billion of value over the next 15 to 30 years. This is a huge leap for the company. So the company, won China's first ever permits to commercially offer fully driverless robo-taxi services in the public on the open roads in Guangqing and Wuhan. So definitely great news all around for this company. Hopefully they will beat expectations. But right now, let's go ahead and change it up and actually go look at some of the fundamentals of this company right now to see exactly where they are going, where they are, and where they're going. All right, so the stock is currently trading at $147.32 a share, and aftermarket is going up to $148.21 a share, and has a market capitalization of roughly $50.9 billion. Now, the first thing I look at, which is some of the key measures of this company, is to look at the valuation of this company compared to its peers in the industry. And because it currently has negative earnings, the price to sales ratio is the most appropriate valuation measure to look at. So therefore the company does seem expensive because the price to sales ratio is 2.8 times compared to the industry average of 1.8 times. It seems like a good value compared to the peer average, though. The peer average is 7.2 times. So they're at 2.8, industry is at 1.8, and the peers are way up here at 7.2. So I don't think they're doing that bad. And if you look at the price to sales ratio versus the fair ratio, which takes into account the company's forecasted growth, earnings, profit margins, and other risk factors, it does seem like a good value based on that, because we put the fair price to sales ratio at 4.3 times, which is well above what they're currently trading at. And finally, if you look at the share price versus fair value when looking at future cash flows here, with this estimate, use the discounted cash flow model. It's trading below the estimate of even fair value at $165 a share is what we put it at. So it's almost $20 below that. Now, looking at the profitability of this company, yes, I know they took in kind of a nosedive with the earnings because their advertising segment. Now, the revenues have kind of stayed steady, though. The company is forecast to become profitable again over the next year, towards the middle of 2023, the probably second or third quarter of 2023, and have an estimated 164 billion won in revenues by the end of that year, with solid earnings of 16.7 billion won. And the earnings growth, it's forecasted to grow about 28.9% per year. Now, finally, looking at the financial strength of this company. Now, Baidu has more cash than its total debt. Its debt to equity ratio is reduced from 52% to around 37% over the past 5 years. And its debt is well covered by operating cash flows of 21.4%. And the company earns more interest than it pays, so coverage of interest payments is not a concern. And also, the short-term assets of 211 billion won exceed its short-term liabilities of 68 billion won and its long-term liabilities of 82.2 won. Now, let's see exactly what do the analysts say regarding this company, and I'm kind of curious about that. They have a buy recommendation currently and a strong buy. Their average price target over the next 12 months is $195 a share, which is reasonable. High end of 272 and a low end of 116. Now, going over the few of the analyst reports real quick. Well, the Street Quant Ratings has a hold recommendation, and they said the primary factors that impacted their rating were mixed. They said some indicated strength, some showing weaknesses, and they said little evidence to justify the expectation of either a positive or negative performance in the stock relative to most other stocks that they review. Now, they said that company strengths can be seen in multiple areas such as revenue growth, solid financial position, yes, completely, and reasonable debt levels by most measures, and expanding profit margins. Profit margins recently took a hit, remember, but now they're going to get better. However, as a counter to these strengths, they found weaknesses, including deteriorating net income, disappointing return on equity, and weak operating cash flow. But that's supposed to project and get better throughout the next year. And the Ford Equity Research Report, let's see, they have a hold recommendation as well. They said the three basic characteristics they look at: earnings strength, relative valuation, recent stock price movement. Now, they said the company has produced a positive trend in earnings per share over the past 5 quarters. However, while recent estimates for the company have been lowered by analysts, Baidu has posted better than expected results, and I'm hoping they do that tomorrow as well. Based on operating earnings yield, the company is about fairly valued when compared to all the other companies they cover. Share price change in the next year indicates that it will perform poorly over the near term. I think what they mean by poorly over the near term is that advertising revenue, we got to see exactly where that's going to be. It's definitely taken a nosedive, so we got to look at that over the next couple quarters. Now, finally, the last report I'm going to look at is the CFRA report. They actually have a sell recommendation on Baidu. That's based on the fact that the deteriorating environment for software-based businesses in China, as Xi Jinping continues to arbitrarily restrict commercial activity, this is important, to boost his power. For example, the Ant IPO cancellation restricts China's big tech. So the Chinese government could just crush down on this company if they felt like it. They haven't yet, but that's a possibility. Now, valuation may look attractive given Baidu's strong balance sheet and the potential it holds in areas like the smart speakers running its DROS software, autonomous driving, and cloud services. But they said, however, though, since large software-based businesses in China now possess only a narrow, dwindling degree of autonomy from the CCP, which is presently in a standoff with the, well, they're not really in a standoff with the US anymore. So they wrote this report a couple, weeks prior. They said initially the standoff through the US SEC regarding the audit reviews. They believe the shares are unsuitable for all, but the most loss tolerant investors. They have a really negative look on this company. Now we already turned a corner with that US audit thing, but yeah. So 2 holds and a sell. But let me bring it back over here. Well, what am I? Am I a buy, hold, or sell recommendation on Baidu? Now here are my thoughts. Now hear me out. There's a possibility that Baidu could move toward a double-digit decline in its advertising business in the 3rd quarter tomorrow. That's reported. Now that could mean a buying opportunity if share prices pull back in the near term. Now the signs of Baidu's flagship app like WeChat is starting to add a plateau, which emphasizes the importance of being able to commercialize on other businesses, not just their advertising business, because success is far from certain right now. Now, cloud and robo-taxis remain the long-term growth drivers for this company and remain intact as headwinds are limited by that near-term advertising revenues situation they're running into. Now, the robo-taxi rollout is set to commence in around 2025 globally, and the company's cloud business should remain at the same 40% revenue increase year over year. That's great. I would expect cloud revenue to account for about 30% of Baidu's core by 2025 alone. Now, Baidu's mobile ecosystem is being strengthened with search, live streaming, mini programs. This is helping to create a cloud closed loop experience for users to acquire information and make transactions. Now, Baidu is a leading company in the artificial intelligence with autonomous driving. In terms of number of miles tested and the number of driver's licenses in China, it's just like it's gone like that. Now, the artificial intelligence cloud has grown significantly year over year, with signs of momentum going to the future. Now, the company is also sitting on a cash pile of over 100 billion won. That's great. And this gives the company more to invest in its technology, particularly the artificial intelligence, as well as the merger and acquisition opportunities. So before I get to my recommendation, I should hear this out. So if the quarter report comes out and it takes a dip, let the news subside and let it settle out. So based on all of that, I am a buy recommendation on Baidu, and I put a 12-month price target of around $195 a share. Now, like I said, the quarterly report, we don't know what's in it yet. It comes out in the morning. So I want to actually review that and say, okay, well, if it's still declining for the ad revenue significantly, just see where it hits its mark, because we need the projections of the earnings to level out negative and then shoot back up in 2023, middle half of 2023. So near term, there's going to be some volatility, and this could dip a little bit lower, but we'll see exactly where it comes out tomorrow. Now, there are risks to my recommendation, though. Alibaba, Tencent, ByteDance, and Keishu and other social media platforms are competing in terms of advertising budgets, which will result in slow growth in revenue for Baidu Search. Now, despite numerous growth initiatives, there is a great uncertainty whether any of these new businesses can be monetized successfully on a mass scale. Failure to do so would result in heavy margin drag. I mean, boom. But, I'm not too worried about that risk. They're doing pretty good so far. And Baidu's leadership and brand in search have been weakened by more competitors entering the market, such as Sogoi, and could be affected by future regulatory risk. The CCP chomping down on them, but we don't know. But I have I think those headwinds they're gonna do just fine. So, but what are your thoughts? Please leave your comments down below. So there you have it, folks. As always, don't forget to smash that like button down below. Definitely helps. And consider subscribing. Hit that notification bell if you like your daily stock reviews and recommendations from an unbiased source. Until the next stock update video later today, folks. Ciao.